Next up, let's take a look at the stock to flow model. So stock to flow, or S2F, is a measurement of how abundant a resource or an asset is. It's measured by the amount of a resource held in reserves divided by the amount produced annually. Stock to flow shows how much supply enters a market each year for a resource. Stock to flow shows how much supply enters a market each year for a resource or an asset relative to its total supply. The higher the stock to flow ratio, the less new supply being greater relative to the total supply. This ratio is typically applied to natural resources and commodities such as gold, but it is applicable to Bitcoin. In theory, assets with higher stock to flow ratio should hold value over a longer period of time, as its annual production compared to the existing stock or the existing supply is small and constant. So here is the gold production worldwide from 2005 to 2020. This is sourced from statistica.com, and this is measured in metric tons. On the y-axis, we see the production in metric tons, and the x showing the dates each year. So overall, we do see an increase in the production of gold over time. The lowest was observed from the past 15 years or so. The lowest was observed in 2008, where we saw 2,280 metric tons of gold either being mined or produced. And more recently, we see extreme highs in 2018, 2019 of 3,300 metric tons of gold being produced. So over time, we are seeing a gradual increase in the amount of gold added to the supply and being mined. Now, for example, there are estimates that there are 197,576 tons of gold that have ever been mined. This can be thought of as the stock of gold, the circulating supply, if you will. Now, there are about 2,500 to about 3,000 tons of gold mined each year, according to the World Gold Council, which is the flow in the stock to flow ratio. As we saw before, this number will fluctuate year to year, but if we wanted to have an average metric to use for comparisons over time, we could use this model, about 2,500 to 3,000 tons of gold being created every year. Now, this is considered a higher stock to flow ratio in comparison to consumable goods and industrial commodities, as they such as industrial commodities, consumable goods, they'll have lower stock to flow ratios since they get value from being consumed, where production keeps up with the demand. Now, in regards to Bitcoin meets all the criteria that analysts apply to the stock to flow model. It's scarce, or has scarcity as one of its properties. It's expensive to produce. It's very expensive to produce, expensive to set up a mining operation, expensive to mine between the hardware costs, the electrical costs, the fuel costs, and paying the workers. It has a fixed max supply of 21 million Bitcoin. This is done through the halving protocol, and it is essentially encoded into the blockchain itself. And it also has a predictable flow of new Bitcoin being created through mining and the halving protocol. As we've shown before, Bitcoin follows a strict supply schedule. We see after each halving cycle, after every 210,000 blocks are added to the blockchain. Once again, miners are processing transactions. They bundle them into blocks and they add them to the blockchain. After every 210,000 blocks are added to the blockchain, a halving cycle occurs, where the amount of Bitcoin issued to the miners as a reward or entered into circulation is cut into half. So from 2009 to midway 2012, this figure was about 50 Bitcoin. After that, after the first halving cycle, this was cut in half to 25, and then cut again into 12 and a half Bitcoin. And once again, in our current cycle, we're seeing 6.25, 6 and a quarter Bitcoin being issued to miners as a reward for processing transactions. And this will continue to occur until all the Bitcoin has been mined. Here's a chart example of estimated halving dates and rewards. It's just another format of viewing that previous chart. And more importantly, instead of thinking in terms of days, we want to think of this in terms of block height. Here we see block height 0. This is the creation of Bitcoin. And then finally, block height 210,000. After the first 210,000 blocks have been added to the blockchain, a halving cycle occurred, and the block reward was cut in half to 25. And this cycle will continue to occur until all the Bitcoin have been mined. And here is a line graph showing the rewards for adding blocks to the blockchain. This is the rewards over time. As time goes on, the rewards will continue to fall. So Bitcoin's circulating supply currently is about 18.7 million Bitcoin, and the amount of new Bitcoin being created is about 328,500 Bitcoin per year. This would put Bitcoin stock to flow ratio to about 55. So we would say there's 11 million divided by 328,500 million. Now, this ratio will only increase as future halvings take place. Every halving will decrease the amount of new Bitcoin created in half. As of our current time, here we see 816, but even as of July 2022, this factor has remained the same. And we're not going to expect a new halving cycle until maybe about May or April 2024, and that's when we'll see the block reward be cut down to a little over 3 Bitcoin. Now here is the Bitcoin stock to flow model mapped out, charted out, and this is provided by Bitcoin.com, and the model is created by 100 trillion USD. Here we see this is the price of Bitcoin overall has increased over time, this rainbow figure, these dots. And this line, this blue line, is actually the stock to flow value of Bitcoin. On the left side, we see this is the price in USD. So this would apply to these dots. So we do see the price of Bitcoin increasing over time. Our x-axis is our years, so each one of these lines represents 1 year. And on the right side, this is the days until the next halving, and this would apply to the dots. So as the color turns blue, we are more near a halving cycle. And then as we see, after every halving cycle, the line turns red, indicating that a halving cycle just occurred, and there has been a significant price increase resulting from that. There's less supply, less issuance, and if the demand remains the same or increases and there's less issuance, as we see here, the price has gone up previously. Will it continue to do so? We will see, but according to these last 3 cycles, it has gone up. From 2012 into 2013, we saw a halving cycle, and Bitcoin increased from about $10, give or take, to a little bit over $100, maybe $200. This would go to about $1,000 in 2014 and increase into 2015. we saw another halving cycle here in 2016, mid 2016, and overall that would be the cause of the next bull run, the 2017-2018 bull run, where we do see Bitcoin reach a new high of about 19,000. Finally, things would cool off, and we do see another halving cycle here, this blue indicating that it's about to happen, and then the red indicating that it has already happened in 2020. And we do see resulting here from this halving cycle a severe price increase to about $65,000 per Bitcoin. Now, there are some downsides to the stock-to-flow model and Bitcoin. Stock-to-flow models are useful for measuring scarcity, but it relies on the assumption that scarcity drives value. No other factors are considered in its calculations other than supply and issuance rate. Critics of the stock-to-flow application to Bitcoin say that the model fails if Bitcoin doesn't have other valuable traits other than scarcity. Another thing to consider is volatility. Now, if the value of the asset is predictable, such as gold, then the stock-to-flow model is much more reliable. Bitcoin, on the other hand, is extremely notorious for its large price moves. It goes up, it goes down, it's all over the place. Now, while volatility may be decreasing over the long run, Bitcoin is not as volatile as it was back in 2013. It's still more likely to have sudden periods of volatility compared to traditional commodities.